Hi guys, welcome to day 28, one of the very last days of the 30-day challenge. Today we're going to go over a few things again, a little bit of theory as to why we do what we do. We're also going to go over more specifically the profit pot and what it is that does specifically. So you can see here on our banking totals, we've actually never put any money into our profit account. So what we're going to do today is we're going to start putting money in it and we're going to talk about what it is that it does and how that's going to benefit you and kind of theory behind why we separate specific amounts for profit as opposed to just enjoying them at the end of the year. So what we're going to do today, firstly, as always, we're going to do the 5 steps to get our daily reconciliations done. So we're going to add the day's worth of transactions. So we're going to add the 2 sales that we've got in here, and we're going to add the fuel transaction and the slabs transaction. So first things first, step 1 is add your income to the income column. So it's nice that we've got a little bit of income in these columns today. Remove those, and then what we're going to do is take the totals from each one and we're going to move them across as additions to the budget pot totals. And we're going to do this for every single one. So when that speeds up, let's have a think about it. So we get that into the VAT pot, which is nice to see that building up in the background. And then what we're going to do is we're going to do that for every single one, as we always do. So our first little bit of profit going into our profit pot, which is very, very nice. We'll go over at the end exactly what that's for. And in fact, we've not got that in. Again, just for my own peace of mind, we want that to look like money. Yeah, we'll go over at the end what exactly is that profit pot does and how to use it and how to make it benefit you. And then we're going to do the same with every other pot as well. So just make sure that's all looking like it should. Here we go. Oh. And then we want to go back to the income sheet and do the same for wages and expenses. So once this is all done, obviously you know the next step from there. We are looking at removing all the outgoing transactions. But obviously first we've got to make sure everything is inputted correctly. Make sure our balances are all looking good. And then if we go back to our income sheet, we've then got the 2 outgoing transactions, which is fuel and slabs. So that's 1 expense and 1 material to remove. So first things first, we remove the £800 worth of materials from this pot. Get that in there. Then we want 45 of fuel from the expenses pot. Cool. And then what we'll do is go back to the income sheet and remove them. So that's step 3 done. Step 4, obviously, move your money around to reflect what your banking total should look like. So make sure you're adjusting that on a daily basis if possible, because that's what kind of helps you with keep on top of your cash flow. So you actually know when you open up your bank accounts and you look at what you've got available, you know that this money here is actually separated out for you. And then this one is the only thing you've got to spend. You're able to spend on materials and expenses. So by separating them out, you know exactly what's available for you. And then finally, obviously change the date to the last date of the transactions that you did to act as a bookmark. Okay, so that's once more going over that. We know what we're dealing with there. We've done it plenty of times. And this is something that you want to try and aim to do every single day. So do that every morning and then everything else will fall into place. So what we're going to do now is we're going to make some adjustments as if it was the end of the month. So just imagine it's the end of the month again. We did the same yesterday. Just imagine it's the end of the following month and we're going to make some more monthly adjustments. We're aiming, like I said, as you can remember, as I'm sure you'll remember, we're aiming to get these totals, these targets reflected in our actual margins here. So that's what we're trying to do. And to do that, all we need to do is simply adjust the percentages up or down, depending on what we want to see. So really from these 2 here, you can see we want to reduce expenses, reduce wages. We want to increase tax, owner's pay and profit by a little bit. And we want to leave these relatively unaffected. So the first things first, if we are reducing expenses, which is the one that you want to kind of aim to reduce nice and early, get a hold of those unnecessary spends and only spend what you need to spend on expenses. If we say we adjust that by 1%, excuse me. So click up here, adjust that by 1%. Wherever we reduce expenses by 1%, we need to increase our VAT percentage by 0.2%. And the reason that is if you're spending less on expenses, there's going to be obviously going to be less that's going to reduce your VAT bill for you. So if you spent 10% on expenses in general, your VAT bill will be what it is. But if you then only decided to spend 9%, obviously your VAT bill is going to creep up because there's less VAT paid on your expenses. So that's going to mean you need to leave more in the pot to cover your VAT bill at the end of the quarter. So that's why we do that. So, and then also, if we're reducing that by 1%, we're increasing the VAT by 0.2. That means you've got 0.8% to put elsewhere. So for the sake of it, let's just say we put 0.4, put half of it into tax. It's 0.4, so that puts up to 5.3, and then 0.4 into owner's pay. Put that up to 0.6. So you see here, the red checker box always adds up to 100. And you can see here your targets again are further reflective of where you want to be. So you can see the targets are slowly creeping up towards that. So what I want to do is I'm going to make one more adjustment. We're going to show you kind of exactly why and the practicalities of doing it this way and increasing your VAT margin as you go. And if we look at our pricing calculator here, I've added a little tab here that you can see acts as the VAT checker. And what this does is it makes sure that your VAT payments that are going to be due on each project actually are going to be covered. You see here, it's actually a little bit off. So we actually need to adjust that by a little bit more. I mean, it's pennies, so it's pretty much there. But you can see on a £5,000 project, the VAT bill that's going to be due is about 572 quid. And you can see here your margins are reflective of that. So you've only put £572 away when if you're thinking of you've got to put 20% away, that's a whole £1,000 you've got to interrupt your cash flow with. So if you've got to put £1,000 to one side, you're limiting the amount that you can spend on other things when actually you've already paid on top of the 20% that you put aside. You've already paid that on your materials and expenses. So there's no point putting that whole amount away when actually you don't need to cover yourself so much. So actually, as long as your VAT amount is checked against this, which is, I mean, you don't have to put this in because that is obviously going to be the case when you do your own margins. But I was going to show you exactly kind of what I mean. Let's reduce the expenses by another 1%, and I'll increase it just purely on owner's pay, for example. And you'll see that the VAT will fall out of whack a little bit. So if we reduce expenses to 9, whatever, and we increase owner's pay to 24, whatever. So that still adds up to 100%. It still all looks good. But if we go back to that pricing calculator, we'll see that the VAT due on that is £582.81 because you've spent less on expenses. And actually, you've only got 572 in that pot to cover it. So whenever you're adjusting, anytime the expenses come down, it's the same for materials, actually. Anytime your materials expense, your materials margin looks to be reduced, whether or not that's something that you want to do. We kind of recommend staying away from that right to the very end, and just try to hold your materials margin as consistent. But if you ever did reduce the materials margin, whatever you reduce it by, 20% of that reduction has to go into your VAT. Because again, there's going to be less for you to reclaim on your VAT bill at the end of the quarter. So anytime you reduce your expenses or your materials budget by 1%, you need to increase your VAT budget by 0.2%. So that's why we do that. So let's flick back and put that back to normal as it was. So that's kind of where we're at with that. So what we need to do is if we ever reduce expenses by 1%, so we'll do that. We'll do that now, and we'll do it in the correct way. So that's 9% in there. We need to increase the VAT by 0.2 to make sure it all stays in line. And then what we need to do is that 0.8% can then go in any of these three that you want here. And let's, for the sake of it, let's put it all in tax. So that's going to be, if my math is right, 6.1. Bingo. So that's in there. That's looking as it should. That's all where it needs to be. And if we look back on our pricing calculator, we should find that the VAT is covered thereabouts 30p. Ideally, you don't want it to be 30p out, and if you want to, I'm not going to do that on live video, so that'll be a little fiddly for very little return, but you want to make sure that the numbers are pretty much the same, and that's how you do that, by adjusting your VAT margin as you go. So as you find you're reducing your expenses, you'll find that your VAT bills will end up larger, but as long as you're looking after it, then no problem at all. That's a non-issue. As long as you're increasing your VAT margin to reflect it, then you're going to find that you're never going to have any problems paying your VAT bill. And you're also not going to strangulate yourself by putting too much of your VAT aside when you don't necessarily need to. And this method absolutely helps you get on top of that. So that's good. The second thing I want to talk about is this profit pot here. And this profit pot, when we're putting 2.6% away, and this profit pot is reflective of the money that you're putting aside to award yourself a profit bonus based on performance. So as we can see here, this profit budget, we've only just started putting money into it, and it contains a whopping grand total of £72.80. And that'll build up in the background. And what we end up doing is when we are calculating our kind of quarterly returns, our VAT returns, whatever it is, at the end of every financial quarter of your business, you award yourself this money as a profit bonus. So 50% of that is going to be paid out to you as a quarterly bonus. So whatever this is, say the end of March is the end of your financial quarter for you, as it is for most people. Whatever's in that, you would withdraw 50% of that as a profit bonus for yourself, depending on how well your company's performed. So it really helps tie you into rewarding yourself based on your own performance. And at the end of the day, the better your company does, the better you should be doing personally. So there's no point having a better year, having a busier year, doing better projects, and in general, just financially having a better year for your company if you're then not enjoying that for yourself. So imagine here, we've got to the end of the quarter, and there's 72 quid in there, just for the sake of it. What you would then do, you would pay yourself half of that, which I believe off the top of my head is £36.40. Award yourself that, and then you'll see that the budget then remains there. For the other half, still in the pot, and you've taken that home. And no matter kind of how much this increases, whatever it is, whatever ends up being in there, when it comes to the end of the quarter, you take half of that for yourself. So what you've got is a pot that's building up and building up and building up for you to enjoy, and then you're leaving half of it in the company for you to kind of retain for a rainy day whenever you need it, for investments elsewhere. But basically that money stays as part of the company for a rainy day, or just in case something happens that you need to cover yourself for in terms of emergency. So you're building up an emergency fund, but you're also rewarding yourself for doing that. So if, for example, here, the maths gets a little bit more complicated, but off the top of my head, what does that make? £1,177.20. It's just a punt. No. Okay, so it's somewhere in the region of that. There we go. I was close. And then you just award yourself that at the end of every quarter. You enjoy the profit bonuses that come with running a company that's making money. And not only is it making money, the cash flow is managed in a way that you're able to reward yourself. So that's why it's so important to get on top of these things, because profit is one thing, like accounting profit is one thing. But if that money is tied up elsewhere and you're not actually being able to access it to enjoy it, then there's really not a lot of point in making money always in the first place. I know it sounds like a ridiculous thing to say, but if you're generating this profit and you're not able to enjoy it because of shoddy cash flow, then you're adding all this extra work, you're adding all these extra things and jobs that you're doing, and you're actually not benefiting from them. So you want to make it an absolute priority to get on top of your cash flow. And if you're watching these videos and you've got this far, it means that you're taking it seriously, and that's a very, very good thing. So these are things that need to be taken seriously, because like I said, if you can't enjoy the profits that you're earning by maintaining good cash flow, then you're going to find yourself sort of back exactly where you were in the first place. You're making more money, but you're actually not seeing any more of it. You still don't know how much to pay yourself, etc., etc., etc. So there's almost nothing better that you could do for your company than get on top of your cash flow. So I'm hoping this is a method that's going to work for you. As always, if you've got any questions or you are struggling with a few things, just reach out to us, and we'll be able to kind of guide you in the right direction. But hopefully these videos have gone through them in a lot of detail. So we've explained almost start to finish a very basic process that you can implement yourself literally on one spreadsheet. that's going to transform the way you look after your cash. If you would like some help in doing this, like directly, and you would like us to look after this for you, we can just completely take care of the whole process, start to finish. We can look after this for you. We give you a really advanced dashboard to kind of see all your balances. We distribute your income according to the correct margins. We work on your margins at all times to make sure they're reflective of where they need to be. And we withdraw any expenses out of the right pot. So you get a dashboard showing you exactly what you've got available for what purposes, and with absolutely no extra effort involved from you. So if you are interested in having this kind of done for you, it's a little bit much. The methodology is the same, but you get a slightly more advanced piece of tech to use and to log into to give you a proper overview and dashboard of where you're at, and actually it requires no extra effort from you. So as always, if you've got any questions, reach out. But if you'd like us to look after this whole process for you, again, just reach out, let us know, drop us a comment or email us. I'll put the email in the description below the video. But as always, checking again tomorrow. It will be the penultimate, the second last video in the series, where we're going to go over the majority of everything else that still needs to be discussed, which is only a few little things. But we're going to go over paying yourself. We're going to go over paying your profit bonuses and everything else to do with that. So make sure you tune in. It's going to be a really good wrap-up video. And then on the final day, day 30, we're just going to review the whole process, start to finish, and go over exactly where this could be a benefit for your business. So tune in tomorrow. We're going to wrap it all up. We're going to hopefully get this fake business onto these target percentages. We're very, very close now. You can see here everything's kind of looking almost as it should. There's a few more reductions to be made. That we'll do that tomorrow. We'll get it all on par tomorrow, and then check back in, and we'll get that all sorted for you. All right, cheers, guys. See you soon.